Okay, second quarter 2023 market update for Waterloo Region. My name is Terry Riddoch, and I'm a broker with Remax Center here in Waterloo Region. And today we've got a very special guest. Who's this handsome guy on my screen here?
Yes, my name is Kevin Amorim with again with Remax Real Estate Center. I'm a local real estate agent here. I have 4 years of work experience with strictly mostly residential resale. So that's kind of my background.
Perfect. And he is an office mate of mine, two over. I happen to be in my kitchen, but it's Saturday morning. You're in the office again, Kevin. It's unreal. Your work ethic.
Correct, correct. Yeah, exactly,
Okay,
exactly. Thank you.
so Kevin and I are going to be going over the market report that we've done for Q2. If and just an aside note, we'll have a link to this in the description if you're interested, so you can print off your own copy. But Kevin and I have ours in front of us, so we're going to have a quick little chat, kind of going through this. So, Kevin, the first thing that I noted with not surprise, but with a certain amount of relief when I was writing this was the recovery is well underway in terms of pricing. How are you finding things?
Definitely, that is definitely the case. Ever since the end of December, it really started to change. Especially, it really started to change the third week of January, where we were really out of the way. We kind of just blasted off from then, and I'm expecting prices to be up again this month, quite a bit, even more so than in April. So yeah, we're going to be looking at probably over $100,000 since the beginning of the year, which is absolutely phenomenal. Nobody could have predicted this at the beginning of the year. Most people were saying, we're going to see price declines. But yeah, it should be interesting to see now that we've had interest rates stabilize, giving people confidence to get back into the market, and they all came back at once.
Yeah, no, I agree. Two points that I'll make. One is, and this is especially true from the lessons that we learned in March of 2020, that the longer I do this, the less I'm confident that anybody knows what's going on in the short term. Like this is kind of nuts. So the numbers I've got in front of me, if we're looking at end of month December of 2022 to the end of month of April, so a few weeks back, there's been a 10.7% jump in that period. So it's kind of crazy. How are you finding it going out with your buyers? Is it sort of as challenging as it was like a year or 2 years ago, or how are you finding things?
It's not as challenging as it was last year, but definitely it's somewhat the same as last year, but not to the same extent, right? You still are in multiple offers in a lot of situations, but there's still a lot of properties that aren't being marketed properly where you might be able to snag a deal per se or not grossly overpay for a property because a lot of people right now you are competing with agents coming from the GTA. They seem to be mispricing properties, right? They're not familiar with the market, right? They might price an area that is, on the lower end as if it was, placed in Hidden Valley, one of the most affluent neighborhoods
Mhm.
here in the Waterloo region, and it just totally throws off everything. And when you are advising your clients, it can be difficult because you're at the table with them and it's okay, we have this price and this price depending on how many offers there are. This is the absolute max that I think the house will go for,
Mhm.
right? It ends up beating you, and you know what, it usually ends up being somebody with a 416 or a 647 phone number.
Yeah, I've been doing this for a lot of years, and yeah, it's those people driving down the 401. I mean, the very first, and I may have told you this story before, Kevin, but the very first time that I was involved in, hey, we're listing this house low and we're going to be holding offers, was back it might have been 10 years ago. Maybe not quite, but it was this realtor whom we both know named Dave, and Dave had this house come up that was really undervalued, and he's saying, "Hey, by the way, we're not looking at offers for a week." I was like, "What are you talking about?" Well, okay, it's the first instance of that. So we all trundle down whatever Wednesday at 7, whatever day it was, to his boardroom, and one by one, we're sort of going in and presenting these offers. Very normal now, but back then, what the heck's going on here? And I remember thinking to myself, like, there were, I don't know, say 10 of us in this room. And I remember looking over, okay, there are three folks here who are clearly from Toronto. And I remember thinking to myself, I've got no idea what's going to happen. Now we were successful. We happily ended up getting the house for the clients. But to your point that you're going out of market, who knows what's going to be happening with the offers. So anyway, a little anecdotal point for you. I'm sure you found that fascinating,
Mhm.
Kevin.
Yes, for sure.
Okay, so the next point that we've got in the report, I've written prices are not down. We're looking at COVID in perspective. Now, you and I talked a little bit about this the other day, but up on the screen now, what this is we looked at from January of 2010 all the way through to the beginning of the craziness in the pandemic. And what we did is we didn't kind of, what we did do was assign a trend line for all of those years. And the price increases matched fairly closely this trend line. Kevin, you'd agree with that looking at this.
100%. Yeah, I'm looking at it right here on my left side.
And then as soon as we hit the pandemic, wow, look at those prices. A little bit of a dip in March, but then bang, up. And then when
Yeah.
do you say the adjustment sort of came? That March, April of last year? We're looking at those numbers bang down, and here we climb back
Mhm.
up. But the interesting thing that we're noting here is that the prices today, after that precipitous, yes, it was precipitous fall of 2022, we're kind of in line of where prices should be from 2010 looking if you were extrapolating out. I find that kind of interesting. Any comments from you, Kevin, on that?
Yeah, yeah, I totally agree with you on that point. Yeah, if you extrapolate things, everything comes back to the original line that we see on the graph here. And yeah, over time, it reverts to the mean. You might have some instances where it goes above that line and some instances where it goes below that line. And of course, if you're below that line and you're purchasing, you're going to get a
Mm.
deal. Like we saw in the summer of last year, where you could have picked up houses for far less than you were buying even in like February, which was absolutely crazy. The top of the market for me was probably February, the third week of February last year, where you could kind of see the
Yeah,
turn,
I'd
right?
agree with that.
And there was a bit
Yeah.
of delay there. And then, July, August, September, October, November, December, absolutely beautiful when it came to actually coming out, showing your clients. You could get financing conditions, inspection conditions, negotiate on price. It was a totally different market, and things have just absolutely switched. And yeah, it's definitely something to see the way that the market changes from one side to the other. Like the lemmings just go from
Yeah,
one side all the way to the other side, and it's just psychological thing that happens, or
yeah,
sociological thing
it's
that happens.
I don't
But
think lemmings. I think sheep. There was a buddy of mine back home. His dad had a sheep farm, and it's sort of struck me one day. It's like the market's going one way. It's like a herd of sheep, and then something, I don't know, bang, they're going this way, right? And
yeah,
then so
yeah,
yeah, but that was kind of an interesting thing to note. So the take home is unless you bought in February, and God bless you, I apologize if you did, and I don't mean to offend, but you know. Except for the people who were buying in February, January, and February of last year, if you've owned the house, like this house, we've been here for 6, 7 years. We're kind of where I would have expected the property to be. So it's a little bit of news, good news there for folks. The other point looking at this is, as I remarked to somebody the other day, it is very difficult to predict what's going to happen in real estate next Tuesday, but it's a lot easier guessing what's going to happen in 5 years type thing. So to your point, Kevin, things kind of eventually return to the mean, right?
correct. Yeah, yeah, totally agree with you on that one.
Okay, so a couple other things. Demand, right? So still very, very strong here, right? Yeah, we're
Absolutely.
getting really good job numbers. And in fact, this is from Stats Can, where between October 21st to October 22nd, we added here in Waterloo Region almost 10,000 jobs. So that represented a 3% growth. For context, Toronto added 0.8%. So we've got really good job numbers, right? And we've got some good
Correct.
wages. The other thing, and this is the one, Kevin, is looking, and up on the screen we'll have the population growth. Like if you're looking in that number on your sheet, sort of bottom left.
Yeah.
Yeah. So why? Okay, it's driven by, yeah, we've got the students back, but it's really driven by we're very popular with new Canadians. Why here, Kevin? What are your thoughts on that?
Yes, definitely very popular with new Canadians coming to Canada because originally when they do come, they go to the larger centers, right? You have your Montreal, Toronto,
Hmm.
Vancouver. Then it's very difficult in those markets to afford a home. And then of course you're going to look, okay, what are the other cities close to us where we can still commute to see family on the weekends? And you know what? We're not going to go east because the closest places, you're looking at Kingston or Belleville, and it's a smaller economy, it's a smaller location, it isn't a hub. And then you go west, you're in Kitchener, Waterloo, you're right on the 401. You have three cities basically to choose from, each of them with pros and cons of living in them. And then the fact that we're so far ahead of so many other cities within Canada, especially in regards to the infrastructure, the technology triangle that we have, the sheer amount of innovation within the region. The LRT was absolutely fantastic addition, especially in regards to Kitchener Waterloo. If you look at the other LRT projects within Canada, they're always in larger population centers, and they're actually behind on the actual construction dates and when they've been created. The LRT has been in system for a few years now. Absolutely fantastic, and it's really transforming the city. You can't even compare it to other cities like Brantford or London or Windsor. They're frankly not on par to our level, and we're a hub. We don't have to go to Toronto to enjoy the finer things in life. We have excellent restaurants, excellent infrastructure, excellent sports, and you do get a lot of great benefits. And you don't have to deal with all that crazy traffic if you're living in
Right.
Scarborough or Brampton or Mississauga. So it's very popular with
Yeah,
new immigrants.
and just for anybody who doesn't know Waterloo Region here, my house, I'm 55 minutes from Pearson, if the traffic cooperates. If you're downtown Toronto, I don't know what that takes, but it's we're right tight. We're a small city, but we're right tight to everything that we want, right? Okay. So, all right. So, demand, population that we've got right there. What do you think of those new construction numbers, Kevin?
New construction, again, we're building a lot in the downtown core. There was a new project being proposed at Borden
Hmm.
and King, I believe. That is gonna
Yeah.
be crazy. I mean, 57 stories and another 52-story right beside each other, 183 meters. I mean, it's really setting us apart. If it does get approved, I mean, it's something I just didn't really foresee growing up here in Kitchener, that we'd have these large towers. I always thought, we were just this farm town over here west of Toronto
Right.
because people didn't really know where Kitchener was, or they had preconceived notions of what the region actually looked at. But we are building a lot of uh, new development downtown Kitchener, 1 and 2 bedrooms, and that's going to put a huge damper on the single family detached homes or the townhouses because a lot of people aren't, frankly, purchasing these homes. We're not building enough of these single family
Hmm.
detached townhouses. Now, with the zoning laws being changed, where you're able to put 4 units on a property on most places. I know the Yellow Belt now that just opened up last week. That's in Toronto. So it's going to be interesting to see what land values are like going forward in the future, that you're able to put so many units on
Hmm.
a property, obviously within the limits of the 35% rule in regards to how much square footage you can put on a property,
Right.
essentially.
Yeah. And
Yeah.
yeah, it's going to be interesting. But again, to your point, we're just not building enough single detached, right? So, okay, we're there. Yeah, and
Yes.
it's just a funny little anecdote. Like, I knew you grew up here, but we moved here. My wife and I moved here in 2000, and we drove up one day in June. We're from Kingston, um, and she was starting her postdoc at University of Waterloo, so she met with her supervisor, and my job was to go around finding a place to live, basically. So and then we were driving back to Kingston, and I remember we were at Sammy. We decided to have a quick bite to eat before heading back to Kingston. So it's around 7 o'clock, whatever. And we went to, I think it was Sammy's Garage. I don't know. But at any rate, King and Victoria. And I remember saying to my wife, okay, you're here for a year or 2 years, and then we are getting the hell out of this town. This is awful. So King and Victoria in 2000. Today, I mean, I own real estate around the corner. It's great. I love
Mhm.
the city. It's just the transformation since I've been here has been remarkable, right? Yeah.
Yeah, for
Okay,
sure.
so a couple little stats, nice and quick. So this one up on your screen. This is sale price as a percentage of list price. So what that means is if you list for $1, how much does it actually sell for? Now I've been doing this long enough that my immediate go-to is, well, it's 96 to 98% of the list price, and that's where it's going to go. For successful, it'll be, you know, 45, 50 days on the market. Boy, the last couple of years that's changed, eh, Kevin?
Oh yeah, definitely. I got in 2019, April of 2019. So I saw there was a bit of a lull in the market. It wasn't as competitive as it is now, and then ever since then, it's just been everything over asking. And then, of course, we had those 5 month period where it was even difficult to get a showing on a property, let alone an
Mhm.
offer. You put it up, you do all the photos, you do the drone, you do the walkthrough, you do the video, and you can beg someone to get through the property.
Right.
And again, it's that notion within the market that everybody, they're reading the newspapers and they're saying, okay, well, I can't go buy a house now, the world's collapsing, yada yada yada, and then they don't end up picking up a great deal. You could have picked up a
Yeah.
phenomenal deal last year at the end of November. December was fantastic for that. But yeah, it's interesting to see.
Yeah.
Yeah.
No, for sure. And just looking at that these lines up on the screen, so you can see that, the height was 130%. Now you recall we're normally 96, 98%, right? Is
Hmm.
normal. 2017 was that whoop whoop, that big sort of mini COVID thing, in terms of pricing. But so when I'm seeing that 130, when I'm looking at anything over 100%, then it's telling me it's either that strategy of pricing low and holding offers, which I want to talk to you about where you think that's going. But the other thing is certainly multiples. So, we're up at, it's 107, 108, somewhere around there. So again, a disinclination to be responsible. Finance clause, inspection, right? Taking your time for this major purchase. So I don't like seeing that going up. I don't know what your thoughts are, Kevin.
Yeah, I'm not a big fan of it either, but I mean, you're going to do the best for your client in regards to, if you are on the selling side, you're listing the house, you're going to list for multiple offers just because you're going to inevitably drive up the price,
Right.
right? Before, when you were able to go shop around, look at a few
Right.
houses and then put an offer, I feel the velocity at which we place offers are far faster than you would in a normal market. So let's say you have a client, you end up writing 7 offers to get a house. A lot of people do that. Some people will write 15 offers to get a
Mhm.
house. Well, that's 14 offers that didn't exist if we were in a normal balanced market, because you wouldn't be putting how sometimes people even put offers on properties they don't frankly like. And they end up coming back to you and saying, yeah, it's a good thing I didn't really like that house anyways. Well, you just made the seller more
Right.
money, essentially, right? So it, it'd be nice if people could educate their clients a little bit more and say, hey, I'm not going to tell you exactly what to do, but the price of this property is worth at least this much. We're not going to bid 600,000 and then have a 30 offer situation where it goes for 8,
Mm.
right? It just doesn't make sense. It's better, you know what? We'll just leave this. Yes, it's out of your price range. We're not going to put the offer in at 600 because we're just making the seller more money at this point.
Yeah.
So that's one thing to really look at.
Yeah, that's a challenge I've had with some people, and usually it's a first time buyer who's just
Hmm.
okay, yeah. But I mean, by the time they put their fifth or sixth, and you're not kidding about 14, 15 offers that I know some people have done, especially in the height. But usually after that time, they kind of clue in a little bit sometimes.
Mhm.
But okay, days on the market, we see that sort of falling. And again, I'm looking at that and just from my perspective, going like again, I'm sort of like if we're looking from up on the screen, the median days on the market, if we're looking from January to 2010 to like 2016 ish, we're that 30, 35, 40 day, it's not a abnormal thing, but right now we're sitting um just what is this? Just a little under 10 days on the market, which is, it's good for sellers, right?
Yeah, great
All
for
right.
sellers.
Okay, so the last little point, and again, I found this one kind of interesting as well, is the mortgage delinquency rate, Kevin. So, we heard, when the rates were going up, Bank of Canada's raising the rates and then raising the rates and then raising, and we had that one jump, I think 50 basis points when the wisdom was 25. Is okay, you know, people are going to get into some trouble here, but as we're seeing, like, there's a little bit of a modest uptick coming out of last year into this year, but are like nothing disastrous there on the mortgage front in terms of delinquencies and foreclosures or powers of sale. What are your thoughts on
Mhm.
this?
Yeah, I totally agree with you in terms of how people are being qualified. And even at the height of the pandemic, not the height of the pandemic, but the height of the market, people were qualifying at, 5.25%, right? They were getting 2% interest rates, but they're going to be hopefully they took fixed rates, because in the future, hopefully fixed rates go back down. And even if, let's say, they took a 5-year fix that 2% at the height of the pandemic, in 5 years' time, most likely you're going to be making more money than you are
Mhm.
today. So that's one thing to definitely look at. And yeah, in terms of the Canadian banks, we're kind of well known for that in terms of how strict our
Yeah.
lending regulations are, and the fact that, when 2007, 2008 happened in the US, it didn't happen here because of that
Mhm.
stricter lending that we did have
Yeah,
in
I
place.
remember. I think it was Minister Flaherty under Harper. I think I have this right that he had brought in. Hey, look, we've got to have this stress test if you want a mortgage type thing, and we're all kind of scratching our heads, but hey, the delinquency rates are, you obviously want to see zero, but to your
Mhm.
point, that's showing its worth. Okay, so Kevin, anything else that you'd like to add? Anything you plug? Any cool listings coming up?
No, but yeah, I do have my own YouTube channel as well. It's just Kevin Amorim Real Estate. You can find me on there. I do weekly videos touching on the real estate market here in Kitchener, Waterloo, and Cambridge, and I'll also be highlighting what the Waterloo region has to
Yeah,
offer. So yeah, if you want to check me out there, you definitely
I'm
can.
a subscriber. I watch them all. They're
Yeah,
great. And the link to Kevin is going to be below. We'll also have Kevin's email, cell phone. Can I put your cell phone up, Kevin? Yeah. Okay.
yeah, for sure. Yeah,
So
yeah, yeah.
Kevin's contact, my contact. If you have any questions about either this report or need some help with real estate buying or selling, Kevin and I are here to help, and we want to hear from you. So thanks for watching.
Definitely.
Kevin, you want to say goodbye to our friends?
Awesome. Yeah, have a good one. It was great having me on here, and look forward to the
Thanks, Kevin.
future.
Okay, thanks everyone. We'll talk soon.
Thanks.